Good morning, traders. John Caruso coming to you here for the morning of July 27th with your currency outlook for the day and moving forward. First, we'll take a look at some of the data. We did see quarter two GDP released this morning. That came in at a very strong number of 4.1%. The market was expecting 4.2, but albeit still a very, very strong number quarter over quarter. Right now, it's interesting to see the market reaction. We do have stocks sort of bleeding off the highs right now, and we have actually bonds bouncing with the 10-year yield coming off of that 2.98% morning high. So interesting reaction there. I think a lot of that has to do with the fact that, number one, this is a backwards looking number. Remember, these are quarter two numbers. It's now quarter three, as well as early on in the week, if you remember, Donald Trump did release the possibility or start to leak the possibility of a GDP reading of 4.8%. So perhaps the market's a little bit disappointed from that regards. Interesting moving forward. These are some things that I'm starting to think about, and based off of the predictive tracking algorithm that I follow that maps growth moving forward, this does seem to be as good as it gets moving forward. We actually do have growth slowing in the back half of this year. Now, what could create growth slowing in the back half of this year? Well, you got to remember, we do have trade war with China, the tariff implementations, and now you can chalk up a currency war over the past 2 weeks as well, as things that could certainly affect growth moving into the back half of this year. But looking at today's action, the US dollar holding flat right now. We're trading about 94.61. Still very much remains bullish trend and very much in the driver's seat compared to the foreign space. I think what you want to do with the US dollar, I do believe it has largely priced in. The US dollar holding flat right now. It's up 8 points at 94.61. Still remains bullish trend and very much in the driver's seat compared to the other foreign space. I think the market range that you want to manage right now in the U.S. dollar is 95.50 to 93.45. If we can punch through 93.50, I think we got more upside to go in the U.S. dollar. However, if we break down through 93.45, I think that's going to send a clear, immediate-term bearish signal to the market. But the U.S. dollar chart certainly still remains bullish trend, and I think you have to trade it in that direction. Looking at the euro currency, same thing, just inverse to the US dollar. Bearish trend, but we're starting to carve out a nice little range. The range you want to manage right now is about 118.50 on the high side and 115 on the downside. Right now we're trading about 116.72 last. We all know that Europe has had a slew of economic difficulties over the past 6 months, and we actually don't see that changing in the back half of this year. So we're going to keep an eye on that. Moving on, I'm going to touch on the Japanese yen right now. Here is a chart right now that has tested a long-term trend line on the downside. Still largely remains in a range-bound trade. I think you want to manage about 89 on the downside and 91 on the high side. But if we can retest 89 and hold that level and start moving back to the upside, you could see a longer-term bottom being put in place right now in the Japanese yen. Japanese inflation data was released overnight. We did see that tick higher again on the consumer price index. So that's something to kind of pay attention to in the back half of this year as to whether or not we can still maintain those higher levels of inflation in Japan. We're going to take a look at the Japanese Nikkei as well, because there is an inverse correlation to the yen. If you take a look at the Nikkei, still very much bullish trend, but we are starting to hit the top end of that wedge, which comes in about 23,000. If the market can retake 23,000, I think that reasserts the bulls, and we can certainly push higher from there. But what I'm looking for is for that level to actually fail, and we could see the market possibly roll off to 21,000 over the next coming weeks. So keep all that in mind. Feel free to reach out to me at the desk if you need anything regarding some of the other markets. Once again, I'm John Caruso. We'll talk to you soon.